Okay, good morning, traders, and welcome to Trade the Structure. Now, I am just running through TradingView this morning. I'm having problems with my Chrome and my trading package, so I've got all those charts marked up, but unfortunately, I just can't get it running, so it won't be done in time to load them all and reset them all. So we're going to use TradingView today. We've got a whole lot of charts, so it'll be based around the indices rather than the CFD or the futures prices. So we'll kick it off. We'll start off with the Asian markets and the XJO, the ASX. So this is what I'm seeing on the ASX, which doesn't look too pretty to me, to be quite honest. The markets actually did hold up okay last night, as in the US session. Prior to that, they were getting sold down. So in Asian trade and European trade, they got sold down last. So it took a bit of a hit. You can see that on the ASX. It actually has been driving back up. We're on a 30-minute chart, so it did took a bit of a hit and sort of ground its way back up to that 75.02 area, or say 75 even area. But once the US actually opened, that was pushing into support. So I sent out a few charts when I was looking at it last night to a little group that we trade with, and just with the futures market had pushed in. So if you match that off to what the index was looking at, it was coming into support. So it was going to open around support. Now they were trying to push it through support. You get the algos generating those sell orders, trying to push it through, but it was equally matched on the buy side. So it looks like they wanted to hold up off that support zone. And if you can go look at the ASX 200 or the CFD pricing, it actually was quite whippy. So I kept pushing into support, spiked into support, and got bought up just as hard. So it got bought up into a nice resistance zone. So to me, it's showing some signs like they want to hold it. And if you're looking at this XJO chart here, you can see why. That looks like potential borderline, just getting a bit of a hammering. Okay, so we could be doing something like this. We'll wait and see, but it's got a lot to do around rate rises. Okay, the whole globe now with US is getting closer to some rate rises, talking up maybe 50 basis points, so two rate rises in one hit. The RBA, although they didn't raise rates on Tuesday, they are looking at they've taken away the word patient that we were speaking about yesterday. So patience meaning they're going to raise soon. So that XJO to me, a good run up here. There's a lot of longs built up that can get squeezed out. We're starting to get a bit toppy. We've got a flush. So everything's adding up for a sell-off, or at least some sort of pullback, a constructive pullback. So either way, I'll be looking for shorts on that. Get across to the Hang Seng. Now we're talking about the Hang Seng falling over from here yesterday. It's got a nice little support. We're going to have to draw these up on the fly. So it's probably going to come into that support. We'll see if they can hold. But for now, it come off those high yesterday, and it's probably going to extend on those losses today. Obviously, it's going to gap down on the open. You can see, well, the futures prices actually took a bit of a hit as well, along with the European and US markets. So I would expect that to open up that zone. Now, if it starts to flow through, we start to get this back and fill mean grind back up, and we start to hold a lower high. I wouldn't suspect that's going to be done in the first session, but it may be done. They have an hour break. It may be done in the second session, another sell-off. So they tend to do it in two stages. Whatever is the most obvious, they do the opposite. Okay, so if it's obviously for a sell-off, you'll probably find it back and fill all session, a bit of a grind, sucker in some buyers, and then load up and sell into it later on. We'll wait and see there, but that to me, longer term, you can see that's holding through that resistance zone into a major resistance zone through here. And this is on the daily basis. After that big sell-off, we had a good bounce, but we're starting to get toppy here. So if that's the case, and we start to break through down these levels in here on the Hang Seng, say in here especially, then I think there's a good sell-off on the cards, especially coming off off that retest. Nikkei. Now Nikkei has the same sort of thing. It's had a good run up here, flush through this zone through here is around 27,880. You can see, and it's holding. Okay, so that's a high. It come back into that zone. It's holding, so we're starting to roll over there as well. It looks like, which to me looks like we could continue that pressure down. Now, whether that's going to be a major sell-off, it's going to turn into let me just see a big something like that, a big extension higher or expansion remove higher. Expansion remove lower. That's what you term with a sell-off. Expansion move lower. Where that's going to be the play, then we're just looking for the trying to sell into those little pops. Okay, and just see if they actually hold. You don't want to just sell into a pop randomly. You want to anticipate where it's going to hold. Go to your lower time frame charts just to filter out those entries. So that's the Nikkei. I expect that that's rolling over as well. We've just gone over the XJO. So let's get over to the US markets. So we're on the 30-minute charts, if I didn't mention that. So you can see that gap down on the open, okay? And you've got some support zones through here. which actually held okay. This is a broader market S&P, and it's, I don't tend to look at it as much. I look at the Dow or the Nasdaq because the Nasdaq is driving the big S&P anyway. Nasdaq has been heading south, which is not too good. So they're talking up more interest rate, more inflation. It's going to be more pressure into the Nasdaq, which is well and truly oversold. They're very, what do you call it, temperamental to raising interest rates, and we're going to go into this big raising cycle. Depending how far it's going to go, a lot of people are saying, we're all worried about interest rate rises, but there's a lot of bulls out there saying, well, we're going to come from very, very low rates to normalized rates. So that's fine because the market on very, very low rates has well and truly extended. Okay, so you're not looking at the rates and where they're going, you're looking at where the market is compared to those rates. Okay, so if they're well and truly extended, the more extended they are, the more, I guess, susceptible they are to any sort of rate rise, let alone rates going from next to zero or below zero to just mildly higher, even if it's a few basis points, because that is the market has already factored in a hell of a lot. It's had a free rein, when very low rates, it had a free rein to run crazy, and it's been the only asset really that people are investing into shares and indices. So I think it's well and truly overcooked the mark or overshot the mark, and it's due for some sort of correction. And looking at that S&P, you can see that big leg higher. Potentially, that's going to take a bit of a hit as well. We've come into this resistance zone we're speaking about for a while now, and it's failed off there. So you washed it out, retested it, failed. So it's really about these kind of areas in here, whether that starts to hold. Are we going to grind down to a bigger, move down to say something like that, bigger moves there before we get a bit of a bounce off a higher low, or is this going to be a really major sell-off? Now that there looks like it could easily be pushing into and building a higher low, but at the same token, that as a definite, if we go back to just look at a daily chart, that looks a bit different. That move down, retest fail, I call it double top, whatever you want to call it. I call it a retest fail. That could really drive the market lower. Okay, so if we get onto the Nasdaq to the daily, same sort of scenario. So this is something I've been sending out to the group for a while now. Just looking at that, looking at the major levels. So that's a major uptrend. That's that channel's broken out of the channel. It's breaking that uptrend, and we come into this major move down, which would mean that we potentially got, if that's the case there, that's your level. Your move. Clone that. Extension down, we could easily be pushing down there just as a secondary move. I like to look at things in two moves. Okay, the first move down, people tend to hold on too long, hold on. You get that bounce, they think they're out of the woods, and you get that secondary move down and a capitulation. And that capitulation could easily, could drive through that level easy down to 11,500 or even lower. Okay, if that's the case, if that's your secondary move down. So over to the Dow, won't worry about that. Actually, we'll go back to the 30-minute chart here. Nasdaq, you can see that's the leg up. We're coming off that level we marked up just on the daily. Retest fail up here, got a lower high in play, and the market's moving down. So it is a bit of a gap. We potentially could fill that gap or even just spike back up to this level 14,740 and then fail off that level. But for me, that trend up, so that was the trend up, that's failing. Okay, it's whether we start to back and fill like that and it becomes more of a grind. You get this kind of move, pushing into new lows. That move is not conducive to a massive sell-off. But it could easily turn into that, okay? So it's just whether or not we're going to start to get some capitulation, okay? With capitulation, I would expect that to go straight through that 13,000 mark. All right, Dow. We're on the 30-minute chart here. Dow rolling over, you can see, and we're coming into these sort of zones, which was, that's what I was talking about, defended last night. So you can see that open, okay? It opened down there. It held up initially. This is, like I said, 30-minute chart. So that was the open there. Drove into the level as we expected because the Dow futures were down quite hard, okay, and that was driving that market. And the Dow futures had their own level it was pushing into a support zone. They held it. You can see the algos working overtime to try to defend that level, and it did. It defended the level, come slamming down into it again before it got defended into the close. Now, I'm not saying that it's gonna hold and we're gonna lift from there, but it could be that we do a bit of back and fill and we have another go at it. So sometimes, the market, if it can't get down the first time, which it is a bit extended down here, and you can see that by the MACD, we're extended last time, we're at higher levels. We're extended again into sort of that same pressure, under the same pressure, and we've got lower. So maybe it's going to have a bit of back and fill. We might sort of pressure up here again and then start working away and go straight through, okay? But wait and see. But for me, that's the key level at the moment, 34,360 or thereabouts. Okay, over to Europe now. We've got the DAX and the FTSE. Now the DAX has broken through some levels as well. It's not looking too pretty. You've got this move up here, had a bit of a spike through some resistance zones. It come into this level in here, which you can see is 14,830, say. Coming to that resistance, failed, held a lower high. So you've got potentially, just depending on how we go, I think that's your first move. Shorter term, can't clone that. Let's just clone that and then move that down. And then that's kind of your leg down at the moment. Maybe it's going to extend into sort of this area in here. We'll wait and see. I think it's probably going to extend in there today. But it just depends how the US goes. I mean, the Europe may extend in there in the open and start working its way back up again. Whereas last night it sort of popped up and then worked its way down again. And it did that the last couple of sessions. It's ramped up on the open, just off the open, suckered in some, trapped in some buys, and then dumped on it. Okay. So whether it's going to do the same again, trap in some buys and then dump on it, push into this zone and start to rebound and start to work its way back up into the start of the US session. All right. So that's the DAX. It is sort of moving down at the moment. It's trending down at the moment with the bigger picture. That's your move up. We're moving down. We're sort of backing and fill of this leg up here. Okay. So that's the major leg up. We're sort of unwinding some of those buys at the moment, and bigger term picture, your daily, you're starting to look at that. Is it going to roll over more? Are we going to start to find a bid in here? Are we going to start to find a bid lower as a higher low off this low, right down at 12, say 12,500, 12,560. All right, the UK, that was something I marked up last night, but you can see it started to go sideways. So this is the index here. It's holding up quite well over the last few sessions, considering what the US has done and what the DAX has done. The DAX has gone on with it on the downside, whereas Europe haven't. Now, the two differences are the UK, sorry, Europe hasn't, UK hasn't gone on with it on the downside. The UK are looking at raising rates, probably a better economy within the European, which is the DAX, but and the DAX, Europe not looking at raising rates, so they sort of haven't got that yield advantage from the currency. People buying up the euro, and if you're buying up a certain currency, you're going to put your money somewhere. Say, for example, the US has had a big advantage. You buy the US dollars for the euro, for the yield differential, for the bonus. Say if you got US is raising rates, other countries are not. Well, it's not really the Aussie, say the Europe, Euro US. You're buying the US, selling the euro. So when you're buying the US, you've got cash to put into potentially the equity market. Okay, but whereas it's the flip side for say the European market, it's not doing so well. So the DAX, probably, that could be one aspect of it all. Whereas in the FTSE, they're looking at raising rates and they're doing okay. So they're getting that sort of funds are staying into the local markets. So that's why I'm feeling like it's starting to hold up okay. It is into a resistance zone through here around that 76.50. Okay, so I'd be wary that if there is going to be a sell-off, it's going to come down with the rest of the market. If we start to get the markets melting down a bit because they're raising rates and they're concerned about markets being too extended into a rate rising cycle, then the FTSE is going to follow it. Otherwise, it could keep grinding into that resistance. It probably could spike into there just to trap a few more buyers if it is going to be a sell-off. If not, they can keep grinding higher. Okay, over to currencies now. The dollar index, we're looking at this zone for quite a while. We're looking at that zone through here. Well, it was around 99.70, 99.30, and this support in here that's held. Now, once the US turned around and said been more aggressive on just interest rate rises, then the US dollar's adjusted up. Okay, so that could continue. It's retested into this support at 99.30 and it's starting to pop up again. So it could just keep grinding its way up to this zone up around that 100 even. Okay, could easily just keep grinding. So that's going to obviously push the euro down, probably pressure the other currencies as well. The pound, the Aussie, the yen, US yen. Or sorry, pressure the yen up, which is another interesting story, but we'll chat about that in just a moment. But that's your base currency, okay? That's what we're looking at. US dollar is sort of the main driver of all the action in the Forex market at the moment. Looking at the euro. Now you can see US dollar going up, that's broken through lows, okay? It's broken through that low, which is probably equivalent to that US dollar 99.30 area. It's broken through that and it's heading south. So where we're going to, potentially down to this level, is the next target. As long as that US dollar continues to press higher, we're going to get the euro to continue to press lower to 108.33 potentially. Okay, so from there, it's retested that level at that breakout level at 109.43. It's still heading lower. That trend is down. Okay, we've got another lower high in place, starting to attack these lows. So if you can drop it down a time frame, maybe. Remember, we're on the 30. If you're trading smaller time frames, just look for those lower highs, maybe especially after a little flush. So you get this kind of move, you got to flush through a level here. I'd be working off something like that. That's prime. Okay, flush there, looking down your 5 minute, you got a big flush up there and working off that sort of minor zone off your lower time frames, but remembering the bigger picture move is down. Okay, going over to Aussie. I'll do it in order I usually do it. Aussie dollar holding support through here. Okay, it's that interest rate was when the RBA was talking up interest rates being more aggressive or taking off the word patient, which it's funny how the damage can do from one word, but it ramped up through these highs at 75.40, ramped up through. Then you got the US come out and started talking up more aggressive, which set the US, the Aussie US down because you've got overextension obviously, and then US was obviously going to adjust upwards, which means the Aussie's coming under pressure. Okay, so you're buying US dollar, selling Aussie. That's what's happened. They've just unwound those long positions, and it's come straight back down again. So looking potential for a move into that 74 to 72. It's just between the Aussie and the US, it's who's going to raise faster. Are we going to get US dollar raising faster, which means probably more pressure to that pair, or Aussie going to match it and they're going to offset each other and they're going to sort of be more range bound. Okay, so that's what we're looking for at the moment. So I'll be looking for that to test because I think to go drive now down through 74, 70, this support through here, to drive down through there, it means it's going to be a hell of a lot faster on the US dollar. Okay, pound. The pound has been interesting. We've got resistance through there, but the pound, and it just keeps coming to the support zone. And we've got a little extension zone through here, which it's extended into and found its way back up above. Let's just make this a bit narrower. Back up above this support zone at 130.60, and extension zones around 130.49, 48, thereabouts. Okay, the market has been pressured lower, and that's probably because that US dollar move up. Okay, so you got the pound. It's trying to offset it a bit because they're talking up rate rises. So there's still there's not so much selling into the pound as there is just buying into the US dollar, which is pushing this market down. Okay, so if the US dollar reverses, expect this to bounce. I would expect quite sharply. Okay, so it is a bit of a mess. It's a bit range bound at the moment. I'll be looking at that. For any shorts, you just be keeping an eye on that US dollar. Okay, if it does start to power higher, then you're looking for shorts. If it doesn't, you might look for a bit of an unwind of these sellers on the pound. Okay, yen. We've spoken about this a few times now. The yen, the BOJ don't want this pair too much higher, so they're going to sort of try to implement, I forgot the word yesterday as well, some intervention. Okay, some intervention into their market as it starts to approach it back up to these highs, which it's doing. So they had talk of intervention. That's why you got this bit of a sell-off. Start to find this base in here, and now we've got higher lows holding, a higher low through here, and then another higher low once it broke out there. Also not really a high low. It's just pressured up higher. So we've got this consolidation through here, broke through, longs come back in or shorts into the yen. As the US dollar is rallying, and we're pressing into this high again at 124, say 30, 25, 30, 124, 30, thereabouts. This high through here anyway. Okay, so for now, it looks like to me it's getting soaked up. Okay, and that's probably anticipation. There's more to the upside to the US dollar. It's in a prime position on the MACD. You come back to the zero line. That momentum starts to lift. You're looking for buys and looking for it to really test into these highs at through 124.25 potentially. But just be careful that it's not going to get flushed there and get dumped, okay? Because shorts may start on the yen, start to close, which means they buy it back up, pressure this pair lower. Okay, over to the commodities. Try to keep this brief. We've got zones through here, which, like I said, I've marked up on the other charts. They've just disappeared, so we're a bit longer today. So you've got these push into the highs around 1945. It's failing. We're starting to get this kind of action. All right. Market's pressuring down. It's holding minor lower highs, but it is holding up through this 1916, 1915 area, which has been holding up for quite a while now. So I think it actually held up okay considering the US dollar's heading higher. There might be a safe haven bid trying to build into gold, because if there's going to be a sell-off into equities, you probably find there's going to be a nice little safe haven bid into gold, sending it higher, but it's got to offset a safe haven into the US dollar, which it generally does. But at the moment, not really a safe haven bid into it. It tried to extend up, and that's probably why it's holding this level at 1916 for now. If equities start to rally up, I would expect this to start breaking through 1916 and start attacking into these lows, a major support zone around, say, 1900 even. Okay, but for now, it's about the US dollar. It's about the equity market. Equity market sells off. Probably find safe haven will start to ramp it up. So I would be looking for a bit of a grind down and holding up off that level and see if we can get a higher low to work and see if it can work its way back up to 1945. Okay, over to oil. Oil's taking a bit of a nosedive. We've been speaking about this for a while. Breaking back down to sort of this support zone around that 93 area. off these, we'll keep drawing that up. It is drawing up. So we've got key lower high at the moment around 105, 105.50, which is holding the action down. We've got major highs up here. So longer term, this is that push up to 93, sorry, 123, 130. I want to talk about here. Okay, I'll spit it out eventually. All right, so where were we on to oil? So I'm expecting that to press down to that level. I think it's a good, got a major lower high here, a big run up, big push down, major lower high, which means you're going to attack these support. Whether you're going to break through it, we could be breaking right back down to 88, or we might start to flush it and start to hold it. Okay, so that's what I'm looking for. Either way, I think it's going to extend. I would expect it to extend in that 93.50 area. Okay, for copper, copper's actually doing okay. So I know now I have to be under 20 minutes for TradingView. So sorry guys on TradingView anyway, you're not going to hear me, but copper. So it looks more rangy. You can see it's sort of that range through there. You popped through the highs, held that at sort of that 481 area. We're now going into the support zone, through here, which we've washed out previously. We've got into this low here. It's starting to extend into that low. A US dollar rally should be pressuring copper. It was actually, look, it was up in the US session, but it was down overall. So it's getting pressured as US dollars rallying. It's going to get pressured. So I would expect that sideways action potentially to break to the downside and start to test into this 448, 45 area, or say 450, this support zone through here. Okay, over to cryptos just to finish off. Now they took a bit of a hammering. Bitcoin's taken a bit of a hammering, basically right from yesterday's morning report. Okay, it took a bit of a hammering. You've gone through some zones. You've got key zones up here which are holding. We'll get rid of that. Okay, up here around 47,300, and now we're pressuring. I would expect you've got some key areas that are probably pressing into here. Whether or not can hold up roughly where it is, this is a potential for Bitcoin. It could slam into that. I was kind of looking at it, slamming into that, and then flushing some stops, and then retracing. Okay, look for a high low to work this leg. Look, basically a short squeeze, and Ethereum is going to be much the same. You've got a level just through here, which you could hold. If it's going to extend on that level, you're probably looking for it to come down through to here, okay, which is around 30.83. So at the moment, it's holding up around 31.87. See if it can continue to do that. Wouldn't be surprised if we do flush through and then bounce straight back. You get this kind of move. Just take out some stops and then getting that kind of move there, okay? If not, look for it to retest from underneath and sell into that zone at 30.74. Okay, guys, that's it. We have to keep it, finish it up there. Thanks very much for joining me. Sorry for all the confusion from this open here because of the Chrome issues. But yeah, thanks for joining me. We'll get we might use TradingView going forward and just use a few charts from the TD365 platform. But anyway, we'll see how that goes. Thanks for joining me, and we'll speak to you again soon.